I'm Danny Hewson, Head of Financial Analysis at AJ Bell, and I'm joined by James Flintoft, Head of Investment Solutions at AJ Bell. We're going to discuss the performance of AJ Bell funds and the managed portfolio service over the first quarter of 2026, which has been eventful. James, thank you so much for joining us. I hesitate to ask this considering the 3 months that we've just experienced, but what have been the biggest talking points?
Well, yes, it was a very good start to the year, but that was derailed by the conflict in Iran, and now what that means for markets. And the main area of concern around that is that the oil price is rising quite a lot. Wider energy prices are rising, and that means inflation is likely to go up as well. And I think increasingly people are starting to worry about what that means for economic growth this year and in the longer term.
And how have equities markets responded? There's been a lot of divergence.
Yeah, there has indeed, actually. And as I say, markets started the year really well in January and February, particularly in areas such as Japan, where we had a good election result there, gave another mandate around the economic reforms that they're putting in place. We had South Korea performing very well within emerging markets. And then, as I say, the Iran conflict took over. There was a decent sell-off across markets and a fair bit of volatility. Actually, the differentiator in terms of performance so far has been that actually those ones that were doing well earlier in the year have performed better over the piece, and included in that is the UK. Some of the markets that have underperformed has actually been the US, as it didn't start the year quite so strongly, and Europe, as it's perceived that Europe's quite exposed to this conflict.
And what about bond markets? Because they've made news again.
Yeah, there's been a big turnaround in bond markets, a big repricing of what inflation risk is incorporated into the bond market and what that means for interest rates. Now it's expected that interest rates will need to go up as a result of the conflict, and that has meant that bond prices have fallen, and particularly at the shorter end of the bond market in terms of shorter dated bonds. Actually, if you think about capital values, actually the longer dated bonds have been more impacted by the conflict so far.
So let's drill down then into AJ Bell funds. How have they performed this quarter?
So over the quarter, it's been a bit mixed. Obviously, much more challenging market backdrop. Returns have been pretty flat across the piece. If we zoom out a little bit, though, we can see that returns have been very good over the last year and indeed last couple of years as well. We've captured the returns from equity markets well.
And the changes that you made in January, how have they played out?
So quite pleased with the changes that we made. In bond markets, we were positioned for higher inflation potentially in the longer term. That's come through in markets very quickly, of course. We were using shorter dated bonds. We were using inflation protected bonds to mitigate those factors. And then on the equity side, we rotated out of Europe. That's been a good relative performance for us. And we rotated into the US, and within the US, some US sectors such as energy and utilities, which have been performing well.
James, thank you so much for talking to us. We look forward to catching up with you and the rest of the team throughout the year.
Thanks, Ty.